Alright, so this is a short trade. I want to test the waters and see how today's market is gonna be like going forward. And so I have these key levels for 4096.986 and 4106.327. These are my go-to levels. Currently bullish on gold, and I'm trying to generate the sequence as I go. So currently right now we have a retracement at 5. So we know our first arc was formed at the 5th candle. Our next entry is 13, which is right here. And I'm kind of watching to see what 13 would do. Sorry for not stepping on the live stream yesterday. I had issues with some few things that complicated a lot of things for me yesterday. I couldn't step in on the live price action, but these are my key levels as I actually anticipate if a trade to those levels is viable at the moment. So if I knew how to put those TP levels, I would use first, I would have entered 2 lot sizes, and then one here would be where I peel it off. But I didn't do that, so I guess I'll just peel it off as it goes. So I currently am watching gold. So many things have changed around gold, and this is because of a time element. This is because of a time element. This is because of a time element. So these are time windows where I'm expecting certain bounce or reactions to occur around. And I'm curious as to what they would do with the price of gold today. Well, I think there goes my stop loss. I honestly thought it was actually going to be upward from here on out. I guess I was wrong. I saw a pool of liquidity get taken around here, so I was kind of waiting for the reaction to continue upward, but it seems it doesn't want to do exactly what I wanted to do. So days like this occur, and we don't hate them, we just learn from them. So when it takes this low, I'm going to be entering another long position right there and then. And I think I'll go in with 2 this time around. And yeah. I would risk just a little as well. Won't leave a stop loss that's too wide. I want to keep it around, yeah, and manage the trade as it goes. When something is algorithmic and you find out that a certain change occurs when you're trading, and you're certain you're trading something that's completely algorithmic, it can either be delayed or hastened as time actually compresses and expands. So it's not something new. It's an ideology that has been in physics for centuries. So all you have to do is just iron out the fact that these things happen. Is that you can expect hours of delay and then hours of, you know, expansions, and hours where speed would come in and hours where speed would be halted, and you would be expected to do a lot more of waiting than actually executing in those kind of moments. And these are those kind of hours. 13 is right here. So I'd like to continue the sequence as it goes. I think 17 would be next. 13, 14, 15, 16, and 17. So this is our next bounce point. It's right here. And then our next bounce point would be right here. At 21. Heading into 22. This is it right here. It might go for my stop again, but then again, even after that, I'm still bullish on gold. In all honesty, all I can see right now is that we took out a major pull in terms of time, and I'm stuck with my ideas. I'm not changing bias until I see otherwise. That's just it. I'm convicted. This is something I've used over and over and over again, so I'm not changing bias. So the reaction at 21 seems promising. But then again, gold is misbehaving quite a lot today. I'd like to mark this level, see what's down here. Oh wow, well, I would expand this in terms of time. That's a sensitive area. It has to do something about this low. It's not gonna leave it that way. So I think if it comes back to break even, I'll be taking the position out, or maybe I'll just do that right now because I anticipate that the possibility of it sweeping this low is likely. So yeah, at this point I should be closing it for now. Then look into a possible run down here. Or I could just hold it and enlarge my risk to around 20 bucks, which is also doable. And well, I don't know. Yeah, but I'm very sure it might come down here. This is that ICT macro right here. The first 10 minutes. It's right here. It's literally a pool of liquidity just waiting to be harvested. And well, 21 gave us a good bounce point, so I think we need to probably just make a calculation for when to expect the next retracement, right? Next is 27, right? 21, 22, 23, 24, 25, 26, 27. 27 is at 538, so we gotta put that right there, right here. Yeah, 27 is right there. Alright, so this is a reaction point for the future, but I'm still convinced we're not going upward yet till this is done with. I just have that strong conviction in me, but I'm willing to allow for more risk and tolerate an upward movement soon after, if should it want to go down there. But I don't know, time base. There's a pool of liquidity down here. I think is suspect. So I literally watch for time-based liquidities and liquidity cycles that exist within the market, and as I read them, I try my best to make sure that some of them might be at locations like this, okay? They don't have to necessarily be at the exact low. Some of them can be right here, or on this high, or maybe on this candle, and then you'd have to put an arrow above and below it, just to kind of signal when you're walking within the moment of your trade. When you're about to execute, you would mark this level. Should it take here, you know, pool has been tapped. Should it take the other side, you're also kind of familiar with what the narrative is soon going to be after that. So it's quite basic. I'm expecting at this high and this high, if should we fail to take this low, and those are close targets. In any case, in terms of rhythm and vibration, our biggest reaction point into the future is this guy right here, and I would like to see them use it to do something like either push price way higher or pull back strongly. So these are the two narratives I have laced up for this guy. If I had to guess, I would say they won't halt until they hit this point. They would want to push it higher and higher until they hit this point. Looks to me like what ICT teaches as a mitigation block. I'm not sure about how that looks like. I have only heard of it. I saw it in some other person's teaching when he was kind of like talking about his concept on his own YouTube channel. so I've not really paid attention to the lectures that has to do with those blocks and stuff. See, I haven't paid real deep in, like, I've not taken note of them yet, but let me just kind of like highlight this region just to give me a form of a clue as to when it gets there, what I want to see around that region. Okay, so heading towards that time now when the move's supposed to do something. Well, if it pulls back again, I'm buying again. In all honesty, I'm kind of convinced they'd want to push it to this level, then yank it lower a bit, or maybe just run through it, who knows. It's an algorithm, and algorithms do what algorithms do, okay? So that's the nature of it. And in all kind of like methodology of trading, I think the time element is the most important, okay? And rhythm and vibration, even liquidity cycles are all just subordinate. But rhythm alone and vibration can help you do a lot in terms of trading. You could easily determine bias using them. But the issue is, after you've known bias, how do you go about trading it? That's the question many people won't ask, right? Is that there are so many options for you to trade. But the best thing is, if you don't know the source codes like we did, the top maybe let's just say 4 to 5% of the world do, it becomes really complex, you know. Trading is actually very algorithmic. It's systematic. It's that that's what gave me the confidence to buy back as soon as I saw this fail. Okay, it's because I know what narrative is in play currently in the market. I know what direction it's pulling towards, and I feel like I'm using a cheat code, you know. But that's how it is. Okay, there are people who knows what the algorithm is going to do before it does it, and there are people who are black box traders. I never believed these things myself until I actually encountered them. All right, so there are things I never even actually thought were possible in these markets, but they actually are, unfortunately. I'm glad that we had like a consolidation on this candle. It didn't do much. That's good. That's compression. That's compression. So there's gonna be a release, right? There's gonna be a release. So 27, and if you do the next vibration, where do you think price will vibrate to next? What would be its response to that level? I wish for this candle to compress as well. I need to see 2 levels of compression and maybe a retracement and a kick higher or something like that. That would be really wonderful. That would tell me that we're continuous in our direction and that we're correct, right? So I love to see these small footnotes that the baby leaves for you when you're trading. It kind of gives you an idea of what you're doing, what you're currently anticipating, what you want to see, what you don't want to see. You would want to take note of all of that, those kind of things. They are hints as to what is going to go on the longer term. So it's kind of complex to just read price as a go, and just make decisions without knowing what time it is. Then again, everything has to be calculated, you know. Well, the reaction I was looking for right here, based on ICT's concept, I didn't get that. I just saw it run through it. So I don't know what he teaches in full, but I'm not trying to say that failed right there. It's not. I don't know what he teaches, honestly. Only he knows what he teaches. I kind of like respect his work. That's all you gotta know. So it's kind of like amazing what you can do with time-based trading, right? It's very algorithmic. It's definitive. It helps you become more consistent and much more relaxed. As you can see, I'm not panicking. I'm not fearful. I don't want to brag, but it's a level when you get to, it doesn't really matter anymore whether you're right or wrong. You just know that you're gonna just see what you're always meant to see, right? But these people doing live streams, they know these things, but they won't teach you. They won't, because no one is that dumb people doing live streams on YouTube, most of them are very familiar with the algorithm source codes. And in truth, I don't really know. I only discovered that there are actually top 5% of the world, or maybe 10%, that knows this thing, okay, out of the entire bunch. And we just happen to be catching on at a very later time, but it doesn't really matter. It works nonetheless, so it's kind of cool. And so we're approaching close to my first target, where I'll be peeling one contract off. It doesn't really have to be, but I'm kind of looking for that level. Once I hit it, I'll be out. Just like if it's possible to take partials, I'll be a good place. And I kind of forgot to reduce my risk. I really thought it was going to go down for this low, but it didn't. So I guess I was wrong, right? I was wrong. You can be wrong so many times, even when you're right. it's that way most of the times, yeah. But I want you to take note of everything I highlighted today. Is that you don't have to get it right all the time. You don't. But the most important thing is no direction, no time, no direction. And that's just it. Based on vibration, I know what this 1 hour candle is meant to do, right? I know. But then again, based on what we already know as, the secret knowledge of how these things behave, I also know by confirmation that rhythm and vibration already gave me that we're going upward on this specific candle. And so I was not fearful. And the algorithm, he also got a pool of liquidity at exactly that time. It was in sync with what I understand to be my trading methodology. So I'm kind of like very relaxed, and I'm watching for when my target is hit. And even if it doesn't hit it and goes back, I'm not changing direction just because of that. No, I'm not. The goal is, I expect that we would run back into these levels right here. I don't intend to brag, but these are very, very key levels of where I want to see price go. It's close to a target that I'm kind of curious about. I'd like to see NQ now, if you don't mind. I'd like some NASDAQ on my chart. I'd like to see some NASDAQ on my chart. These are just hourly separators, just things telling me when there's a new hour in the market opening. That's just what these indicators do. And well, it's all good. So we're approaching close to the first target. Looks like we're gonna have it, guys. Well, to hell with it. I already have well, I kind of want to continue the vibration. Let me get to know when the climax is approaching. We have 27 right here. I want to quickly vibrate that. So 34 is our next lookout, which is the terminus. 27, 28, 29, 30, 31, 32, 33, 34. So we're exactly at the 34th candle. And if I was using strictly CAD counting, that would be my exact point of close right there. But because of time, I know there's a pool of liquidity right here just waiting to get in sync with the previous one. And there's another up here. Okay. So I already predefined these levels, so I can actually keep vibrating, right? I can just keep vibrating. And there was a compression here, which is a good thing. it means we're going to keep going higher, is that whenever you see these candles, when you're expecting retracement and it doesn't give you, but rather it gives you a compression, that means we are really strongly bullish. It couldn't find time to truly compress and pull back. That's a good sign. That's a good sign. When you're bullish and time-based liquidity has already been hinting to you that the direction is already confirmed, then what you need to do usually is just simply take into account that this was a compression and that you're interested in seeing what that was that it did, and that your expectation is that we're not pulling back strongly anytime soon. But these can actually be defined pre-market. All right, there's a way you can know that this guy is not gonna pull back that much. All right, but it requires a lot of back and forwards, and I'm not really into that right now. My head is already hurting. I already took like a trade early in the morning going downward on my live account, and I'm kind of like I took this one that came down, but not the full run. I just ran out as soon as I could get the target I was actually anticipating, and well, that was it. And I don't trade for long terms. I keep telling you that because my attention span is very, very little, and compared to many of you guys, my attention span is pretty low. I'm sorry to say, but I don't have it. I don't have it to hold for long durations. I think didn't get to it actually. It just stopped dead in its track, closest to the point where I was anticipating a movement. I might have marked this level wrongly. Where was it? I think it's an older pool. I might have placed it on the wrong side, but I'm pretty positive we came close to it. And I was anticipating this move to happen when we touch this, which means my line might be wrong. Yeah, I might not have placed it at exactly the point where the candle. Yeah, I was expecting this reaction when we touch this, not before we touch it. But anyways, I might be wrong, I might be right? Not that I know anything. Yeah. So it's quite very, very natural that at this point, if I were trading in my main account,